Hello, friends. So today I wanted to make a video and just talk about some of the changes we're seeing in the market, some of the great things that are going on here in Memphis in the investment world, and how you guys can be a part of that. So let me share screen real quickly. Turnkey Invest Academy. So this is where we're going to be talking a little bit about, what's going on in the investment world, some things I've learned along the way, investing in real estate. Let's look back at 2021. In the beginning of 2021, I was buying houses. You were buying houses, a lot of you guys, at 4% interest rates fixed for 30 years. And what did that look like? $100,000 house, we were putting 20% down and borrowing $80,000. Our principal and interest was $382 plus taxes and insurance, of course. But just for this example, let's keep it real simple. Fast forward to 2022. Right now, I have lenders that can do 6.5% or a little bit less. Reach out to me if you need those names. One of my jobs is to make sure that your team that I put together is the best of the best. So my preferred lender list, we've added one new preferred lender. I personally have bought about 19 homes in the past year with one of our preferred lenders. Reach out to me. I'm happy to talk to you about anything there. So what is the difference? Now it's 6.5% interest fixed for 30 years with 20% down, $506 a month for your principal and interest, plus taxes and insurance, of course. But for this example, I just want to look at the difference in this interest rate. So that's $124 a month. Ouch. You can still buy houses. We just have to maybe rethink things a little bit. So it depends on what your outcome is. Are you a cash flow person and you want to know you have the most cash flow per property that is out there on the market? Are you an appreciation person, someone who is investing long-term, knowing that this home will appreciate over time, especially as we go into the talk a little bit later about inflation, that rents will rise? Prices aren't going down, folks. Prices are going up. So we might see a correction in some real estate prices temporarily, but we have printed so much money as a country, and we continue to print this money, that prices are going up. This is the new norm, is my thoughts. So yeah, it stinks that you're not able to get that 4% interest rate, but let's face it, people, we were living in unprecedented times. We might not ever see it again. My personal house, sub 3% interest rate fixed for 30 years. One of the things I'm running into a lot as I talk to people about selling a house to me, and maybe they're looking to sell it because they're mad at their current property manager and they want someone like me to just come in and buy it, or they've had a rough go with residents and they're tearing up the house or having to be evicted, and now they're calling from one of my advertisements to come buy the house. For some reason, they're a weary landlord, but they won't let that home go because they've got a 3 or 4% interest rate fixed for 30 years. And I get it. How could you sell a house that's got a 3% interest rate, then go buy another property with a 6.5? So making some of the less desirable real estate more desirable to that owner who's got that great interest rate. All right. So what does that mean for turnkeyinvest.com and investing in a whole right here in Memphis, Tennessee? Well, what we're seeing is people choosing to go for less expensive homes that provide more cash flow. So recently I've sold several like $60,000 properties. If you've watched any of my videos, I'm not a big fan of those. I'm just going to tell you, I like Class A properties. I like Class A properties because I like a passive income. On paper, these lower price homes promise a higher return, and a lot of the times they do give a higher return. But the majority of the headaches I've had in my investment career, so I'm on my 20th year in real estate, and I've hit my head against the wall plenty of times. The majority of the headaches I've had in this world have come from the lower end properties. It's just that simple. But if you start buying less expensive homes, you will be able to capture more cash flow. Why do most people buy less expensive homes? It's not for the cash flow, it's capital. It's a lower down payment. However, it's about the same closing cost to buy an $80,000 home as it is a $200,000 home. I hate closing costs because it's gone day one. I love putting my cash into a property because it's there, it's sitting there, it's tangible, I'm in control of it. As long as you never get into a situation where you have to sell, because whether you do well on a property when you sell it, number one, depends on when you buy it, but number two, depends on when you sell it, meaning if you sell it right now, you're going to get top dollar, baby. We're still getting top dollar for houses. Soon, that might not be the case. So just always be in a position where you don't have to sell. That's the key there. So that's one thing we've seen people doing, buying less expensive homes in order to recapture that cash flow that's being lost through higher interest rates. More money down. So I'm seeing more and more people choose a 25% down or more down payment to get a better interest rate and better cash flow. When you put more money down, you get better cash flow. It's just that simple. You choose a 25% or more down payment, you're going to get a better interest rate from your preferred lender. So I'm seeing a lot of that. I would rather put my money into a very nice property than the stock market. So most of you guys that I'm working with, we're all blessed enough to have extra income that we're able to put into real estate as a long-term investment strategy to gain that cash flow, that mailbox money, that generational wealth that a lot of us have talked about, had one-on-one conversations about. And I'd rather put $100,000 into a really nice property than I would, putting it into something I don't control. No doubt. And then I have several clients that I work with. They're very close friends. Reach out to me if you're interested in this, that I give them an 8% guaranteed return on their money. So if you're interested in what that looks like, reach out to me. Simple math. You give me $100,000, I'm going to guarantee you an $8,000 return on the back end secured by real estate. So if you're interested in that, I'd love to talk to you. Inflation. So I've already brought it up. I heard a very shocking statistic, and it was on a podcast, so it has to be true, right? But there's an intelligent guy I was listening to, and he said that during the last recession, which was caused by real estate, during the last recession, we printed nearly $1 trillion to get out of it. That's to bail Goldman Sachs out. If you've seen the movie The Big Short, or you lived it like I did, you know that we went through a really tough time as a country. And to get out of that tough time, quantitative easing, all the money we printed for the entire debacle, almost $1 trillion. But then he went on to say that since COVID, so 2 years, through stimulus packages, checks just being handed out to people, PPP money. Hey, you business owners out there, all that PPP, they just didn't just come out of, we didn't get the money out of reserves. We printed that money. So his point was that since COVID, we've printed $6 trillion. Oh my goodness. So if that is true, if we printed 1 trillion, and we know the ramifications of what that did to the country through inflation and the mess that the last recession was, if we have printed $6 trillion, folks, we don't know the ramifications of what's going to happen for that. I do know that unlike stocks and bonds and mutual funds, investing in real estate can make inflation actually work for you, increasing your income as the inflation rises. Real estate is real, it's tangible. This stuff doesn't go anywhere. So what is a true investment? It has to have 4 characters. So it must appreciate over time. The overtime is critical because you might go through 3 or 4 years where it depreciates, but it always comes back up. It's always cyclical, but over time it appreciates. You can leverage real estate easily. So that's been one of the big catalysts that made my world take off, is the Fannie Mae, Freddie Mac, 20% down, 30-year fixed money that's been available. And for so long, it's such cheap interest rates. And now very fair interest rates. They're not high yet, folks. Anything over 8% is considered high if you look at the past 50 years. So it appreciates. You can take leverage. There is a tax advantage. So if you don't know about the tax advantage of real estate, you need to get into Kiyosaki's books and, reach out to me. I'll give you the correct reading. But through depreciation, through interest that you're paying to the bank, so many ways, if you have the proper tax preparer, if you just broke even with your real estate portfolio and you're a high net income individual, or you have a high income and you're living below your means, you need real estate to hedge against paying so much taxes. I mean, you've got to get into real estate if you have a larger income than normal. So it appreciates. You can leverage it. There's a tax advantage. And there's cash flow. Without cash flow, it's not an investment. So $1 cash flow means you're positive. So that would not be my number one pick. But if it's just $1 positive, then it's cash flowing. So one of the things I talk about with cash flow is worst case scenario, doomsday type stuff. If I have $300 a month cash flow on a property, that's really good. I have $300 of cushion. So if the world goes into the next whatever, and I, for some reason, needed to lower my rents, I could lower by $300 and still break even. So I like the cushion there. Now, I don't spend my cash flow on frivolous things, trip to Hawaii or a new convertible. I guess I haven't gone through my midlife crisis yet, but my cash flow is used for the next down payment on a property. So as a cumulative of all my properties, all that cash flow is going into an account and it's getting ready to buy the next property or debt reduction. So once you've accumulated enough properties in your portfolio that once they're paid for, whoa, the cash flow is going to be amazing. You take that cash flow, you reverse it, you take one property and you pay that property off rapidly. Well, how do you know which property to pay off? Well, the highest interest rate, if they all had the same interest rate, that's normally not going to be the case. The lowest dollar amount loan you have. If the third option, though, I have several loans that are 5-year fixed interest and a lot of others are 30-year fixed interest. So the worst terms, the loan that has the worst terms. So I'm currently dedicating all of my cash flow to pay off my properties that have 5-year fixed interest rates. Those are with local banks. So inflation is your hedge against, real estate is your hedge against inflation. Much better than handing it to somebody over at Charles Schwab and saying, throw it out in the stock market and we'll let you control it. At the end of my investing career, I hope you do a good job for me, buddy. No, I want to be in control. All right. So with inflation, what else are we going to see? We're going to see higher rents. Everything's going to go up. Gas, we're already seeing that. Groceries, utilities. Now, everything I've named here, who's suffering? Our residents. Our residents are the ones who are going to be carrying this burden. And well, James, they aren't going to be able to do it. How are we going to get through this? Because the person that's renting from us is not going to be able to keep up with the amount that we're going to have to increase these rents because gas is going up and groceries are going up and utilities are going up. The basic cost of living is going up. So what are we going to do? The world's coming to and know there's going to be a big shift. One of my favorite real estate books, if you're real estate guru like me, you want to learn, Gary Keller is an amazing author. He's the guy that started Keller Williams Realty. And he's got an amazing book called Shift. He co-authored it with a Memphian named Jay Papasan. And it's really based around the real estate industry, but it could go to any industry. And the real simple approach to it is, if you stay the same over a 30-year period in real estate, you will eventually go broke. You have to be ready to shift gears depending on what the market is doing. What's a good market? What's a bad market? Depends on what you're doing in that market. We're going to see a shift with our residents. So sadly, most of our residents are not going to see large pay increases through this shift in our economy. They're going to have to shift in the property that they are expecting for their budget. Back in 2020, you could have gotten this house as a rental, if you're one of our residents, for $1,100 a month all day long. 2 years later, this same house is $1,500 a month, and we cannot keep them in stock. So a nice little 4-bedroom, 2-bath, brand new construction home. We've seen a $400 increase over the past year and a half, 2 years. So that person with the $1,100 a month budget can now rent this little house. Nothing wrong with this house. It's a 3-bedroom, 1.5 bath house. It's not brand new. It is being under renovation, going to be a full turnkey property, a great house, different area, built in the 60s or 70s. So it's just a shift in what you're going to be living in. It's that simple. Unless you have something change, you get married or get a better job, maybe pay off some other debt. Maybe you decide, hey, I don't need a $600 a month car payment. I'll drive a beater so I can live in this house. But I'm seeing it time and time again. I buy a lot of houses from weary landlords for whatever reason they're selling these houses. And their current property managers never raise the rents. I mean, they're just taking the easy way out. So when I take over, I buy the house, I go out, I meet with the resident in person, and I already have with me 2 options. Option number 1, a lease renewal. I want to keep you as a resident if I find that the house is being taken care of and clean. And here are the terms. And it's 30-40% higher rent than what they're paying currently. Number 1, because their old property manager never bothered to raise rents. But then I have data to show them why. It's not because I'm the mean bald guy coming out to raise your rent. It's because other homes in the exact neighborhood you live in are paying that kind of rent. That's market rent. So I show them the comparable rents in the area. And I've already had a home inspection if I'm buying it, just like you do. I show, here's the home inspection. I'm going to fix all these items. You're going to have a better home. Of course, for that, I'm going to need a higher rent. And I'm going to need a 2-year commitment from you to lock you in at this price. The second option is a 30-day notice to vacate. So it's a little hard, but it's moving with lightning-like speed, which is what real estate's all about. So go out to the house, that's grossly under rented due to whatever reasons. I now own it. I show them the comparable sales. I give them 2 options. Look, pay current rent. Let me fix the home up a bit, as much as I can do with you living here, or vacate so that I can then renovate the house as needed to get that market rent and either sell it to you guys on turnkeyinvest.com, continue to manage it with Foundation Property Management, or keep it myself in my portfolio. So often when I have this talk with this resident and I'm kind of coming in as the mean guy because I want to raise rents or see you later, they say, well, I can't go that high. My budget is $1,100. I show them my website right there on my iPad, my tablet. Here's what I have available for $1,100. And I get a lot of kickback. So you're telling me I can't live in this part of town anymore? Not for $1,100 is the answer. You're telling me I can't have a 4-bedroom, 2-bath home for $1,100. I have to go to a 3-bedroom, 1.5 bath home. That's the new market. If you're going to stay at $1,100, you're not going to be able to rent what you were renting a year and a half, 2 years ago. It's just a different market. It's a shifting market, and we all need to be aware of that. All right, so let me end on this. If you have properties in Memphis, Tennessee that I don't manage, I want to throw my hat in the ring. I want to be your manager. I want to earn your business. If you have properties you would like to talk to me about, please schedule a call with me. You can get a hold of me easily. Go to turnkeyinvest.com, go to foundationpm.com, which stands for Foundation Property Management. Over the past 2 years, as things were slower in the acquisition, renovation, sale side for me, by choice, because I was not going to step out of my comfort zone of neighborhoods that I buy and sell in, neighborhoods I want to manage properties in. I wasn't going to change my buy box just to keep busy and just to flip houses. I'm not a flipper. Long-term strategy. I know the type of houses I want to manage for you guys, the ones that produce great results. We stuck to that strategy, but it gave me the time to really focus on property management. And I fell in love with it. Man, the systems and processes. What do we do when this happens? And we have a 10-step game plan. What do we do when that happens? And really, there's nothing overly complicated about property management, but there's a lot of moving parts. And knowing that we have put the time and dedication into growing what will soon be the most admired, the most respected property management company in Memphis, Tennessee, and then beyond, here at Foundation. I want your business. Reach out to me if you are having a lackluster experience with your current property manager. I want to see if I can fix that. I'll give one quick example. So I had a dear friend of mine, and he's got several properties I manage, but one that I did not manage. And it was managed by another company in town who's been around for a long, long time. And the resident moved out. So now he's faced with what we call a turn in the industry. A turn, one resident moves out, you have to get the house ready through repairs, market, find a new resident, move somebody in. That's the entire turn process. So he got a estimate from his current property manager to complete the task needed to make this house rent ready. And he called me, he said, James, I'm blown away by this price. Could you just give me a price to make this house rent ready? I was absolutely, matter of fact, don't even send me the quote from the other guy. So we got access to the home. He was able to get me the lockbox code. Sent my team out blindly, just like it's another house, another day, same processes and ever. Within 30 minutes, we had an estimate in this rental owner's inbox. He called me and he said, James, you might want to check your numbers because I think you missed something. So got my superintendent on the phone. We talked it through. No, we haven't missed anything. We were 30% lower. And it's not that we're giving things away. It's just my philosophy that I'm not going to kick the rental owner in California or Israel when they're down. And they're going through an expensive process already of having a vacancy for maybe a month or two if they aren't on it. You can't be throwing big profits in something like that. You know, my income does not come from turning houses. And if it ever has to get to that place, I'll just quit. I build houses, I buy houses, I renovate them, I sell them. I have a portfolio of my own. And I manage your properties as if they were mine. And in every time I can save you just a few dollars or 30% on a turn, I'm going to do so. And by doing that, people are just flocking to our company in droves just from word of mouth. And I appreciate those good word of mouth from everybody that's been sending that our way. So if you've got properties, if you want to learn more about growing a portfolio of properties in Memphis that produces good results, schedule a time to talk with me and my team. We want to get to know you one-on-one, learn what your goals are, and then see if we are a fit to make that happen. If we are, then we'll strategize together and put a plan together to meet your needs, not what we're trying to sell somebody. You tell us what you want, we build the structure around that and make it happen. Thanks for your time today. And if you have if this has been helpful, please give us a 5-star review on Google. That would be amazing. That would make my day. I love seeing 5-star reviews from all my clients. Have a good day.